Welcome to Geopolitics Economy. Today's video dives into a question that is quietly shaking global markets. Is China secretly devaluing the yuan to hurt the US dollar? In this video, we will break down how currency devaluation works, what China is actually doing with the yuan, why the US dollar is still the world's dominant currency, and whether this is a real threat or just economic fear politics. Let's begin. Number 1. What does currency devaluation really mean? Currency devaluation means a country allows its currency to weaken compared to others. When a currency becomes weaker, exports become cheaper, imports become more expensive. This helps exporters, but it can also create inflation and capital flight. China does not openly announce devaluation. Instead, it manages the yuan very tightly through its central bank. This is why many economists call it controlled weakening rather than free market movement. Number 2. Why people believe China is devaluing the yuan on purpose. The suspicion exists because China's currency does not float freely like the US dollar. The People's Bank of China sets a daily reference rate and allows only limited movement. Whenever China's economy slows, the yuan often weakens. To critics in the US, this looks like a deliberate strategy to keep Chinese goods cheap and competitive, especially during trade tensions. But intent is difficult to prove, because China also faces real economic pressure. Number 3. China's economic slowdown is a key factor. China is dealing with serious internal problems, a massive real estate crisis, high youth unemployment, lower foreign investment, and declining consumer confidence. When an economy slows, its currency naturally comes under pressure. China weakening the yuan helps exporters survive. But it is also a defensive move to stabilize growth. This is not purely about attacking the US dollar. It is also about protecting China's own economy. Number 4. Is this a currency war against the United States? A currency war happens when countries intentionally weaken their currencies to gain trade advantage. The US has accused China of this in the past, especially during earlier trade wars. However, today's situation is different. China cannot afford a sharp devaluation. A weak yuan risks capital flight, foreign investors pulling money out, and loss of global confidence. So China is walking a very narrow line, weak enough to support exports, but not weak enough to trigger panic. Number 5. Why hurting the US dollar is extremely difficult. The US dollar is not just a currency. It is the backbone of the global financial system. Over 80% of global trade, international debt, and energy transactions are priced in dollars. US financial markets are deep, transparent, and liquid. China's markets are not. The yuan is not freely convertible. Capital controls still exist. This alone prevents the yuan from replacing the dollar. Number 6. The dollar's strength comes from trust, not politics. Global trust in the US dollar is based on rule of law, independent institutions, transparent markets, and military and political influence. Even countries critical of the US still hold dollars. During global crises, money flows into dollars, not out. That is why every dollar collapse prediction so far has failed. Number 7. What about BRICS and de-dollarization talks? China promotes de-dollarization through BRICS and bilateral trade deals. Some trade is now settled in yuan, especially energy deals. But these numbers remain small. Compared to global dollar usage, most countries still convert local currencies into dollars, not yuan. De-dollarization is more political messaging than financial reality at this stage. Number 8. Could China be using the yuan as a long-term weapon? China's strategy is long-term, not aggressive. Digital yuan development, gold accumulation, trade settlement experiments. These are slow structural moves, not an immediate attack on the dollar. China understands. Breaking the dollar system overnight would also damage China, because China still holds massive dollar-based assets. Number 9. Who is actually winning the currency game right now? At present, the US dollar remains dominant. China's yuan remains controlled and limited. China is trying to gain influence, not overthrow the system. The real risk to the dollar does not come from China alone. It comes from U.S. internal debt discipline and political stability. Currency power is earned over decades, not forced through manipulation. So China is not secretly destroying the U.S. dollar. It is carefully managing the yuan to survive its own economic challenges. The dollar remains the world's financial anchor because trust cannot be devalued. The real battle is not currency versus currency. It is system versus system. And for now, the U.S. system still leads. If you want clear, research-based geopolitics and economic analysis, without hype or fear narratives, subscribe to Geopolitics. Economy. More global power shifts explained simply.